If you'd like to see more of our videos, please subscribe to our channel on YouTube. Good morning, traders. Welcome to today's market review. This is Fred Razak at CMtrading. Today's February 26, 2020, and today is Wednesday morning, so no major economic events scheduled for today. However, what the markets are doing is unbelievable, okay? Tremendous volatility in the markets. We're just going to start out with the Forex symbol. South African Rand weakens versus the US dollar, while the Japanese actually gains versus the USD. We're going to take a look at those two pairs, and looking at the Dow Jones, it continues to panic sell over 800 points. Over the last 2 days, we've sold off on the Dow Jones more than 2,000 points. Unbelievable days for the Dow Jones. Okay, now looking at the commodities, we saw actually gold bouncing, okay, as the panic fears continue, and oil retraces below $50 a barrel, okay, which is a major retracement for oil. And lastly, looking at that big gap yesterday that we had, you could see that it was a gap and go. Okay, yesterday we asked this question, was it fill in the gap or gap and go? And sure, the cat is out the bag and it was a gap and go. But the question is what's going to happen today? But let's take a look at the markets and see what we can expect from today's trading. So we're going to start here with the South African Rand, the daily chart of a South African Rand you could see here. And basically, it's been on this massive tear, okay, for quite some time as it's depreciated versus the dollar. Now, there are a couple of things to consider here. Gold is getting stronger, which is a big commodity for South Africa. And two, we are getting close to a resistant-ish level, okay? So this may be a decisive point. If we do decide to retrace, this would probably be it at this area, okay? However, looking at the Japanese yen, you could see that we had that complete fade opportunity to 110, and we're right there, okay? And we're bouncing right off of that level, okay? So the counter move to the counter move, okay, is another bounce, okay? If we don't get that, then we will get a little bit of a correction. Now, jumping into gold, trading at 1645, I imagine that we'll test this 1670-ish level again. We just hit 1688 earlier in the week. I don't think we'll rally that far, but it may just continue bouncing here today to test that double top. Okay, looking at oil, though, we did break down. Now, this is a really important place for oil, because if it does break this low of 49.55-ish level, it's going to further decline on the bottom. Okay, so that's a major correction for oil. And looking at the Dow Jones, selling off yesterday, we're looking at a longer time frame here, but looking at a 1 hour chart, you could see that we pretty much sold off tremendously here, okay, to this 109, 110-ish level right here, from 28, 141. Okay, from yesterday's trading until today, we're trading at 27, 103, and this is really something that is unbelievable. Okay, tremendous sell-off here as this has gotten much weaker. However, okay, as it's making this double bottom, if it does bounce here, this would be a place for it to bounce. Now, looking at a daily chart, we do have a little bit of a support-ish area here. That's previous resistance, that's previous resistance, and this would be subsequent support. So with that said, I would imagine that this may bounce today. If it does, it's going to bounce today. Otherwise, we could see ourselves going back to this 25,000-ish area. Okay, that could still wait. Now, looking at some of the stocks, Apple sold off to 287. But if you look at some of the stocks, they sold off. It was a gap and go. Okay, but they didn't capitulate further down. They didn't close on their bottoms. Okay, if we look at Amazon, very resistant to breaking below this 2,000 support level. Okay, which is suffice it to say that this is market fears. Okay, market fears play out, and then, you know, they go back to the financials and they see that, okay, things are not as bad as we thought they were. Okay, I'm not saying that we're going to go back to our highs necessarily, but I do expect some sort of bounce. And when we do bounce, there's a lot of short covering that's going to happen. It's a short squeeze, and that makes a very sharp bounce. Okay, so just be aware that if it does happen, I would take the things that were actually beat up the worst, because those are usually heavily short sold, and then there's, you know, these short sells have to cover it, and then it bounces just so tremendously. Okay, so some of the ones that I would look at is actually Facebook. Okay, 196, which adds more volatility to it, but this is you know, this was to be expected anyway. This massive sell-off, the coronavirus was just, you know, part of the impetus of the sell-off. But I do think that we will bounce off of these areas at some point. Okay, I'm not calling a bull market just yet, but we're not in a bear market either yet. Okay, we're somewhere in the middle of that. Okay, so until we get the confirmation that we are truly in a bear market, I'm not thinking sell-off. Okay, I'm actually thinking some sort of correctional move on the upside at a certain point. So just expect it. Just be careful about it because it is very volatile. You want to keep your stop losses at a minimum. Okay, especially as this does create that type of situation. This is Fred Razak. I want to wish everybody a great trading day. Thank you.